All right, in this lesson, we're going to be looking at common stock. We're going to help you understand the basics of common stock and how it even just comes about from a corporation standpoint. So let's get started here with understanding common stock. So companies issue stock based on their corporate charter that they file with the state in which they operate in. So this is a state by state thing. We don't just come up with shares. We actually file this with the Secretary of State in the state that the corporation is going to be founded in. So most companies use Delaware because it's a little bit easier and they are business friendly. So they'll use Delaware. And when they send their corporate charter to Delaware, they are telling them how many shares they want to issue, okay? Or how many shares they want to have the option to issue. Now, a corporate charter will indicate that maximum number of shares the company can issue. Now, states don't really change it. Like when they get the corporate charter, they don't go, oh, that's too many or that's too less. They just kind of accept it. So it really is one of those things where you just send it in and it's usually approved if you pay the fees and you meet all the criteria for filing a corporate charter in the state that you are doing business in. Now, some key parts of common stock are kind of these four terms. The first term here is authorize. The second term is issue. The third term is treasury. And the last term here is outstanding. And we're going to talk about each one because they all mean different things when it comes to common stock. So let's look at the first one, authorize. So when we say authorize, we mean that it represents the maximum number of shares a company can issue based on its corporate charter. So if they've issued a corporate charter with 10 million shares, that is the maximum amount of shares they are authorized by their charter to issue. They cannot issue more without amending their charter. Okay, so authorizes, what does their charter say is the maximum that they can issue? This doesn't mean that they're going to issue. This is just a kind of a piggy bank of how much they can issue. That gets us to issue. So of the authorized amount, the company will decide how many shares they will issue. And it's not always advantageous for a company to issue every single share that they're authorized to issue. So for instance, if they've authorized 10 million shares, they shouldn't issue 10 million shares. So it represents the amount of shares the company has sold or distributed. So usually this amount is going to be less than your authorized amount. Now, the total amount of shares issued must be less than or equal to the amount of shares authorized. So even though we are issuing X amount of shares, it must be below how much was authorized in their corporate charter. Now we have treasury. So treasury represents issued shares. So they are shares that have been issued that have been reacquired by the company. So the company has reacquired them. They haven't retired them. They've literally just reacquired them, rebought them, and kind of put it into a safe, if you want to think of it that way. So you buy it, you put it in the safe, and you leave it there. They're still issue, they're still considered issue because you haven't retired it. Retired them would be like shredding those shares, and so they're no longer available. They're still available to be sold. They're just not in the public's hands, they're in the company's hands, and the company cannot own itself. So we call it treasury stock because they can't own themselves, okay? They have been issued previously and are now in possession of the company. We also call this stock buyback. So if you hear a company doing a stock buyback, that's what they're doing. Now, after the stock buyback, they can either retire them or they can hold them as treasury shares. That's a totally different conversation for a totally different day. But that's what a stock buyback is they're buying back stock and then they can hold it as treasury shares by not retiring them. The last one here is outstanding. Outstanding represents issued shares that are held by stockholders rather than the company itself. This is the most common way that shares actually get into your hands. They are outstanding because you, as a shareholder, own it, not the company, okay? So we've got four terms that we're trying to help you understand here. Authorized, which is the amount of shares that have been authorized to be sold by the company. Issued the amount that they've actually issued of their authorized amount. We also have treasury, which is the amount of issued shares that are in the hands of the company that have not been retired but can be reissued or resold out into the market. And then we have outstanding, which is what shareholders hold in their hand from the company. Okay, so here's an example just walking you through this here. Assume company A is authorized to issue 10 million shares. So they're authorized to issue 10 million shares. The company has issued 3 million and currently 2.8 million shares are outstanding. How much shares are in treasury stock? So this is kind of the way that I like to think about this here. So we've got 10 million shares and it's represented by this entire box. So we've got 10 million shares that we can authorize, right? Well, of that 10 million, we've issued 3 million, which means we have 7 million that we haven't issued yet. They're still authorized, we just haven't issued them. So we have 3 million that are issued, represented by the smaller box. I know it's not to proportion, but you got to work with me here. All right, so 3 million issued. Now, of the 3 million issued, 2.8 is outstanding. What do we mean by 2.8 is outstanding? Shareholders hold 2.8 million shares, which means how many is left in treasury stock? Well, we have 3 million issued. We can account for 2.8 as outstanding, which only means that 0.2 or 200,000 shares are considered treasury stock and that they are owned by the company or in possession of the company. So the way that we look at treasury and outstanding is we can add those together and we get issued. So 2.8 plus 0.2 equals 3 million. That's the amount issued, and then from there we've got our 10 million authorized, so we can still issue 7 more million shares later on, which that's how we kind of how all of them work together when it comes to common stock. So that's a lesson on understanding common stock. Specifically, it was just an understanding of the 4 key terms: authorized, issued, treasury, and outstanding. We will be using those terms more and more throughout this section, so we want to make sure that we give you a good foundation on helping you understand those common key terms. So until next time, we'll see you in the next lesson. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.